San Diego home prices dipped again, but the real story is what's happening with inventory. Let's break down the October 2025 numbers you need to know about. All right, here it is, the San Diego real estate market update for October 2025. Let's take this look. It's a comprehensive deep dive into the market trends, pricing, and dynamics and inventory levels throughout San Diego County. So this is just a very broad stroke of what is happening in our real estate market. But as we look at the market snapshot for all properties, San Diego real estate market showed modest declines across most metrics in October 2025, with sellers experiencing longer wait times and slightly softer prices. However, the market remains active with nearly 2,000 transactions closing. So the number of new listings coming to the market is 2,820, with 1,977 pending sales. Our closed sales are approximately 2,000, sitting at 1,994. Now, the days on market, that is sitting at 43 days on the market. And this is what's interesting about the month supply of inventory. The month supply of inventory is sitting at 2.8 months. That's up 3.7% from this time last year. Okay, so that's what's important, is that month supply has increased, and the median sales price is sitting at $889,000 for all properties. Now, when we look at detached homes, here's our core metrics. Single-family detached homes continue to dominate San Diego's real estate market and the landscape, accounting for the majority of transactions. So, new listings. There was 1,762 listings that came to market across the county. That's down 1.6% year over year. As far as pending sales, those are down 1.2% year over year, 1,287. Closed sales, those just ticked up just a scotch this time year over year. 1,321 total transactions. That scooted up by 0.1% year over year. Now, the median price for single-family detached homes is $1,011,500. That's down 2.7% year over year, indicating softening market midpoints. We are going to see these numbers continue to go down in November and December. When we look at the stats in January, that's just normal for this time of year. But I think that this is something a little bit different. There are a lot of different types of things coming down the pike with Fannie Mae and Freddie Mac, but we'll just have to see how that averages out. But the average sale price is up 4.4% year over year at $1,457,811. So the luxury market is driving strength. Now, let's talk detached dynamics. Now, the divergence between median and average sales price tells a very important story about San Diego's detached home market. While the typical home median has softened in price, high-end transactions continue to push the average price upward. That is just a sign of luxury market resilience. So median price year over year dipped 2.7% year over year. Entry and mid-level market homes are experiencing a price compression. But the average price did increase 4.4% year over year, which means luxury properties, typically $2 million plus, remain competitive and command premiums. Now, the percentage of list price received is 97.2%. That's down 0.7% or 0.7 percentage points, but sellers are still getting slightly less relative to list price and compared to last year. So negotiations are back in play, but there's still not deals out there to be had. But the days on market is up 20.6% to 41 days. Homes are sitting longer before going under contract, and this extended timeline reflects reduced urgency from buyers and more inventory to choose from. So if you are selling, keep that in mind. Detached home supply and inventory. The supply story. So the detached home inventory remains constrained by historical standards, but conditions are generally loosening, with 3,083 homes, and a 2.5 month supply of inventory in the detached market. Now, balanced market, typically 5 to 6 months. At 2.5 months supply, it remains tight, but the modest softening compared to the prior year signals the market is recalibrating after the frenzy of 21 and 22. Now let's talk about attached homes, because this is where you can get a great deal if you are starting in that entry-level market. And I was just having this conversation this morning with a new buyer. So the attached home segment, including condos, townhomes, and attached properties, tells a slightly different story from the detached homes. Now there's fewer new listings and rising inventory. Buyers are finding more opportunities. The number of new listings, 1,058. That's down 4.1% year over year. Year over year, sellers are less eager to list attached properties. Pending contracts, 650. That's up 1.1% year over year. Closed transactions, down 1.8%. 673 transactions across San Diego County. The median price sits at $660. Now that number was about $580 several months ago, so that number's still going up, but year over year it's still down 2.8%, which is reflective of a softening, and the average price across the board for all condos is $806,000. Now let's look at this, attached home pricing trends. So median priced homes, change is down 2.8% year over year. The average price is down 1.2% year over year. Take a look at this. Year over year change in list price to sales price is only down 1% year over year. So that means sellers are getting more for their condos, but it just depends on where the condo is and in the market. And does that condo complex have issues that a new buyer is willing to take on? So the percentage to list price down 1 percentage point. So sellers are getting down 1 percentage point from last year. That means sellers are still getting 96.6% list price to sales price. So if you put your condo on at $100,000, you would get $96,600 for your condo. So sellers are accepting below asking price quite frequently, and your days on market is up 12.5% to 45 days compared to last year. That is a significant increase. Now, attached homes, inventory, and supply. So attached home segment has seen the most dramatic shift in market dynamics, with inventory up 10% and month supply climbing to 3.3 months. Now, buyers in this segment has significantly more leverage than they did a year ago. Inventory growth, number of units available total, 2,238. Supply increase, up 3.3%. That's significant. So how do we interpret that? At 3.3 months supply of inventory, the attached home market is transitioning towards more balanced conditions, while still favoring sellers compared to truly balanced markets or 5 to 8 months. The 10% inventory increase gives buyers substantially more negotiating power than they had in recent years. It is expected to continue softening in this segment. So just be aware, if you are selling, you are going to see a softening in this market. Let's talk about big picture takeaway. The October 2025 data reveals San Diego market is in transition. Now, after years of benchmark appreciation and intense competition, conditions are normalizing, okay? Softening prices, both detached and attached segments showing year-over-year median price declines 2.7 to 2.8%, signaling a recalibration, not a crash. Reduced urgency. Days on market is up anywhere from 12.5% in the detached market to 20.6% across segments. Bidding wars are rare, but buyers can take time with decision, and inventory is trending up. While still historically low, inventory growth, especially at that 10% for attached homes, is giving buyers more options and negotiating room. Now, for buyers, you have more time to evaluate properties without pressure. You have greater ability to negotiate price and terms, wider selection, especially in that attached segment. You are still facing mortgage rates of 6 to 7%. For sellers, strategic pricing. Okay, it's critical. Overpricing leads to extended days on market. Home preparation and presentation matter now more than ever. Expect negotiations and potential price reductions. Luxury and detached remains the most resilient. So, if you are ready to make your move, what do these numbers mean for you? Market data is only valuable when applied to your specific situation. So, if you're not ready today, you got to keep watching these segments that I do because they keep changing, they keep moving. So, if you're considering buying your first condo or selling your first home or investing in rental properties, these trends have different implications on everybody's goals. So I specialize in transitioning regional statistics into hyperlocal insights because the San Diego market just doesn't exist. Market conditions in Carlsbad are different from Chula Vista, La Jolla, North Park, University Heights. They're all different. So let's talk about strategy for your specific market. Now, if you're trying to make sense of these numbers for your specific neighborhood, or you're planning to move in 2025 or 2026, send me a DM and I'll break down exactly what it means for you, for your equity, and your next steps.